Hello, ladies and gentlemen. Hello, good morning to everyone, and welcome to this Monday morning webinar. I hope everyone is doing really well. I hope everyone had a great weekend, so you got some rest. For those who join us for first time, just to introduce myself, I'm Theo. I do the webinars here at Admirals. Every Monday to Friday, we have this 30-minute session. So the disclaimer, as you all know here, just to make sure that you understand that this content is for general information only and is not intended to provide trading or investment advice or personal recommendations. Now, I would like to, let me share the screen. Okay, here we are. For those who don't know it yet, we have the YouTube channel here. Let me just send you the link. Please make sure you subscribe on the YouTube channel. You enable the notification buttons because you're going to receive all the notifications when we uploaded videos, when we go live. And here at the Trading Spotlight, you can find recording webinars from myself, from Paul and Jens. Now we launched some series of webinars. I do trading psychology related. Paul is doing price action series, and Jens it's doing the fundamental part of trading. So you can have the opportunity, if you miss the webinars, you can refer back to the Trading Spotlight and you can watch them. The next I would like you to know about, it's the Instagram channel here. Here at the Instagrams, we put a lot of reels, we put a lot of content, the 30 seconds market updates I do every Wednesday here, and many trading ideas about stock market. We give you intense information about how the stock performs, what stock trading is doing. And so you can follow us on Instagram. Now, the calendar for today. Today is Monday, the 5th. The ICM non-manufacturer purchase manufacturer index in the US later in the New York session. Previously, it was 54.4. Now the forecast it's to drop to 53.1, but in general, when we are holding above the 50 mark, this considered as bullish for the currency. Now, keep that in mind. We're going to extend more the analysis when we go to the charts. Then today's top headlines from the Premium Analytic Portal. We have quite a lot of headlines for today. You know, guys, it's Monday, so there are many news. They came as important on the weekend. So let's just start it. OPEC Plus keeps oil curbs despite Russia price gap. Dow shines as higher rates squeeze Nasdaq tech stocks. China loosens COVID restriction as public anger simmers. Business software companies say customers are pulling back aimed economic concerns. Economists think they can see recession coming for a change. Must inflation be brought down all the way to 2%? That's, guys, that's a really, really big question, and we will see. I'm very curious as well to see what it's going to be the new average for inflation number. Then why you can't find Wagony, the weight loss truck. It's some battle going around this new truck been approved recently, and Elon Musk is tweeted in October about this one. Iran disbands morality policy, considers changing hijab laws, official says. Russia We all rely on shadows, tanker, flat on, keep oil floating, flowing. British police raid London home of Russian oligarch, seize cash and devices. Credit Suisse investment bank spin-off attacked Saudi Arabia prince. New Zealand plans law to force Google, Meta to pay news publishers for content. Apple makers plans to move production out of China. Okay, that's the one. Hello, guys. Good morning. Good morning. Welcome. So, from the research terminal, does anyone use the research terminal, guys? Did you find it useful? Just please let me know if you have tried it, if you just try to validate some of your trading signals through the research terminal. For example, today, a pair that we all know, the euro US dollar, it started 1 day and 7 hours ago. The direction is bullish, 70% sentiment. It's a good number. It's pretty confidence. Duration, it had it for 8 days. So that's a short-term duration. And if we can click learn more, we can see the new sentiment. We can see that it's well above average. And recent signals from here. In regards to the intraday, it has a 4 hour ago, 50%. Usually I try to validate signals that they are higher than 70, 80%, especially on the intraday. What else from here? And then you have the technical insight, technical summary. You have the short-term, intermediate, and long-term trend. If you would like me, I will just expand this window so we can see what's inside. Here on the short term, for example, short term considers anywhere between 2 weeks and 6 weeks. Okay, that's not for intraday. That's forecast based on purely indicators and price action, like the commodity channel index. It shows that if we click there, it tells that the price is relatively far from the 20-bar average price. The commodity channel index measures the deviation of the price from its average. And from the name, I believe everyone understands that it first implement to the commodities market, rather than anything else. This commodity channel index been founded by Donald Lapert, and he used it first for initially for the commodity markets. Okay, now we have some bullish sentiment here. So based on this forecast, there is I believe there is support resistance with signals here. Yep, it tells you where the stop loss could be placed and all this stuff. So it's really cool to use them if you want at least just to validate some of your trading signals, especially if you are new. You can try to use them. So good morning, Theo. Missed your last week. Call out to work. Okay, that's all right, Raquel. I hope you could find some time to watch the recording webinars. And let's go to the charts. Let's start with the dollar index. That's always. So what do we see here? We talked about this area that it couldn't hold. And we said that to be a double bottom formation, this is not enough. Double bottom means to break higher than this one. But if we want to get into some trades in anticipation of the formation, like I've done last week, very, very low risk, just because of this bullish engulfing forecast. I just went long on US dollars and short on euro. Okay, but also I initiated a trade after that. I initiated a trade to the opposite side, so I'm still in the trade. I'm selling the dollar and I'm buying the euro. So I use the currency euro, US. Come on. Euro, USD. I use it for long plays. That means I buy the euro and I sell the dollar, because in currencies, I'm saying that for the new people, in currencies, we interact in two transactions simultaneously. When we buy the euro, we sell the dollar. When we sell the Australian dollar against the US dollar, it means we buy the US dollar. So we are still bearish in the sentiment here. I believe that the market can trade it well below this area. Now, I don't have a crystal ball, but what do we do when we break the support? Usually as a day, as a time filter, we use the 2-day close below this support level. So if the price is going to close for 2 days in a row, or if you are watching the 4-hour chart for 3-4 bars in a row, then we can definitely valid that this breaking is considered as real, and we can still looking for shorts on the dollar. In regards to the DAX 40, on Friday, we had this sideways here, especially if you go down to the 4-hour charts, you can see some more sideways reaction. But this pattern here looks like it's an ascending triangle pattern. So this one here looks like an ascending triangle. And implication is to see prices push to the upside. On the daily chart, though, we are still bullish. We haven't reached, frankly, this level of resistance. So we see what the market is going to do. FTSE 100, we are just around in this area of resistance. We had this bull trap, all this false breakout here. Now, if the market is going to keep climbing, we're going to see based on the direction. Dow Jones 30, we hold above this level. That's a good point, especially with the US dollar weakening. The Dow should push to the upside. We had this nice price action here, so we see if the market is going to favor the push to the upside. Now, how can you participate in these trades? Well, you can either go to your lower time frames and find your catalyst based on the checklist we shared many times here. Or you are trading just price action based on some supports, you can do that as well. Or if you are a breakout trader, you can have your pending orders to buy here, your stop loss either here or there, where you believe it's more appropriated, and then you participate in the trade. The NASDAQ, we are just around this area of resistance. In my opinion, it's a minor area of resistance because on Friday we didn't see a sell-off from this area. So it looks like buyers, sellers are not there to defend this level. So it can be break. The S&P 500 still in this uptrend trend line is intact. And based on the trend theory, if a resistance or a trend line, any area in the market that it's the price doesn't just moves away fast from the area and it just fluctuates around, it looks like it's going to break through. Okay, but the leading indicator, the US dollar, the dollar index, it shows weakness here. So we have to see which indices, which average is shows a better strength of bullishness. And in my opinion, it's the S&P 500 and the Dow Jones for today. Okay, unless the Nasdaq breaks above this area of resistance. Doesn't matter because it looks like a minor area. It's not an area. It's still an area of resistance. Okay, guys. Then hi, please, Aussie CAD and Pound Oz. Aussie US dollar is for now rejected from the 200 moving average for a third time. Yep. Also, I see a divergence on daily. Is it a reverse sign? What do you think? Great question. We will answer them. pound against the pound against the US dollar. We are hovering around this area of resistance. We will see if it's going to break. Of course, you can see similar pattern to the dollar index, but to the opposite. We are still bullish. We don't think to sell this from here to the downside. Also, this one here, we are not thinking to sell it now. We estimate, we forecast this pattern and it plays out well. It's still playing. We said that we have this ascending triangle formation, short-term ascending triangle. So if price is going to break to the upside, we estimate that this pattern is going to be completed. That's the base of the pattern, and we duplicate this distance so we can come up to this area. Aussie against the US dollar. For me, it's an uptrend now in this time frame, okay, because we broke outside of this strong trend line resistance that was intact for a while. And although it's for some traders, they will say it's a tentative and not a valid trend line, but because we had these swings in the market and we broke and closed above for a few weeks, it looks like it's a valid one. Now, with the dollar weakness, this market can be pushed to the upside. And we said a few times, not necessarily because the dollar opponent is strong, but mainly because the US dollar is weak. Okay, the strongest currency so far, it's the Kiwi. You can see clearly that it has the lesser red candles and it just pushes to the upside. We said that on the 4-hour chart, we had some trades here. I took a trade here. I don't know if you guys took them. We talked about the break of this. Now, if you take the break on the daily or the break on the 4-hour chart, doesn't make so much of difference because we focused on the daily chart and we see them. We see a simple trend develop, so we want to buy. In regards now to the Aussie US dollar, also I see divergence on the daily chart. Where do you see divergence on the daily chart? In which indicator, Cherry? But really, if you see divergence, bullish divergence or bearish divergence, which divergence? If you see divergence here, let's say I'm on RSI or stochastic, because especially on stochastic, because it's faster oscillator, the divergence doesn't mean they're going to change the direction of the market. Divergence means they can possibly change the direction of to create a correction in the market. Okay, guys. But first, the most important is the overall technical analysis, and then the oscillators and divergence and all this stuff, we use them as filters on the MACD, okay? So same, first we see the overall picture and then we see the divergence, okay, guys? People, because really, people, they messed up a lot. They start taking trades against the prevailing trend just because of some divergence on the indicator, or because, let's say, we are in this uptrend and the indicator it's in an overbought condition. So let's say if the stochastic it's above 80 or the RSI it's above 70 area overbought, then they trying to sell. But really, what for? Unless we are in a major level of resistance and then you combine them, and then it's another story. But here, just for a correction to start selling is not that high probable trade. Aussie USD against the JP. Sorry, I just used this charts. MT5. So we have this. We have this trend line, we have this support, was holding, been broken. Now we are clearly in a downtrend, guys. We can see it here. Next support, it's down there. So we can see some pushback, pullback here. This is, for me, this is the easiest ways to trade the market. Doesn't mean it's the most profitable. Easiest way, in my opinion, it's the high probability trades. High probability trades, they come when there is a trending market, and this is clearly a trending market now. So we have few areas to watch. We have this resistance, broken support, now it's resistance. We have this trend line resistance. We also have, if we take the fib retracement from the beginning to the low, sorry, from this one here to the low, we are about the 50% retracement exactly at this area of resistance. So the market looks like it has somewhere it's attracted to it to correct. So we keep an eye on either any price action here indicates indecision, like the inside candles, and then we can do the breakout strategies. Breakout strategies for me best work when the market is trending, like a candle by candle, inside candle. We take breakout trading, or we can have some limit orders here, sell limit. Once the price come to retrace up to here, we can get into the trend. However you would like to see it. But remember, don't get caught by the simplicity of the market and translate it into your mind as something that it's not exist because it's simple. Okay, traders, we tend to have at some point this thought, especially if we have a lot of knowledge, like many of you already have a very good knowledge of the market now. So if you see this and you say, it's too simple, so it can't be true because it's very simple and it's not complicated. No, that's how the market, they show us what they want to do, what they are doing. And we see that the downtrend is in motion now. So because we cannot participate right at the beginning of the downtrend, because we don't know if it's going to be a downtrend, but now we have a crystal clear clue that this market is pushing lower, we're going to try to find some entry points. And entry points, good entry points, they come after green candles. Okay, so we want buyers, we want to see the buying activity, and then we sell. Now let's move on. We have a request here that was the pound, the Aussie CAD and the pound Aus. Let's find the Aussie Canadian dollar. So I was expecting to have some retracement at least at some fib level to participate to the upside, but market is just pushing so aggressively. Now we are right at this area of resistance, this congestion area, so we can see what is going to happen. Really, there are no crystal bias here. Are we shorting right now? We have to go to the weekly time frame and see if there is some type of trend line retest. No, not even the trend line on the weekly has been retested yet. So here we have this non-failure swing, as we call it in technical analysis. So the market is making low, a correction, normal correction, and then it makes a swing here, and it doesn't hold on the correction phase, and it just creates a new high. So that's what we call a non-failure swing. Market broke this neckline now. We can see possibly more push until this trend line, but what can we say for sure? We can go to target this area here, is on the weekly chart, where we have this picture if we see the market breaking higher than this trend line. But for now, are we shorting? Definitely not. Are we buying? Definitely, in my opinion, not yet, unless we have some sort of trend line or moving averages or trend line retest. Okay. We said that we trade what we see, not what we feel. Okay. So the next one is the pound against the Australian dollar. the weekly chart shows that the market is just trading around this area of consolidation. More clearly on the daily chart, we have this pattern here. Now, when it's best to use the oscillator, guys, like your stochastic, your RSI, your commodity channel index, and everything else as an oscillators, is when the market is ranging. Traders, they, in my opinion, wrongly, they use the stochastic and all the just to spot the divergence and everything. It's a great tool, but the most use, the best use of the oscillators are when the market are ranging, because the price is in a line with the overbought and oversold area of the oscillator. And as you identified that here we have a ranging market, then you can use it. You can use it with your oscillator to see if you want to sell it from here. Just blindly based on the oscillator, I don't do trading, but on ranging market, yes, there is no, it's not an issue to plot the oscillator. Like, let's plot one, indicators, oscillators. Which one do you guys want to put? Let's put the stochastic, for example. So stochastic oscillator, it's in an overbought condition. So you see here, no, that wasn't. Okay, that's not very clear. But when stochastic went here in an overbought condition, the market just for of this, then here, no, it didn't show. So now we are entering in this overbought condition again. And let's try to see another oscillator. Let's have a look at the relative strength index, the RSI. Oh my God, how would delete it now? So neither the other side, it's in the overbought area. So overbought area consider above the 70. On the RSI, this oscillator doesn't show any signal for short. Okay, so maybe it's a warning that the trend, the move maybe wants to break to the upside. Okay, so pretty much here, in simple words, this is in a ranging market, low probability, very low probability. Okay, all right, guys, that's all from me today. I hope you had a good, sorry, the crude oil. Someone asked for the crude oil. Crude oil, it's still holding above this support, so we can expect, we broke above this support line resistant downtrend, so we expect to see some more bullishness. We will see what is going to happen. Anyhow, I'm still in a trade here, or no, I think that's played out. Sorry, I have to check. I think that's the one played out. And yes, we talked about that. Sorry, guys, I've been too busy. I haven't even checked the trades because I have the stop loss. I have the profit target. I think that one ended already. And the gold one, I think so. Yeah, the gold one, it was that one ended 2 days ago on Thursday. So for this one here, I believe we have more bullishness to come. So we'll see what's going to happen. And the last one, let's have a look at the gas. We had a big gap today on the gas. In my opinion, if someone holds short positions, you should hold the short position from right here. If you're still holding, it looks like it's a good time to lock your profits, right? Okay, guys, I hope you had a great session today. And I wish you to have a happy trading, and I'll see you tomorrow again at the same time. Thank you so much. Bye, everyone.